Hello, welcome to another episode of Market Maker Mondays. I'm the Nomadic Trader. Today's date is the 16th of October 2022, and I'm going to take your attention straight into the continuous chart, which is ES1 exclamation mark, is the ticker symbol on the S&P, for the S&P, I should say. And the reason why I explained last week that I don't really have my finger on the pulse is I am actually invested in various degrees of US stocks, and the US 500 actually takes up some of that portfolio. So I have a vested interest, and lately I've actually felt that it has been clouding my judgment somewhat. So I've not been able to completely disconnect from my own personal interests and projecting that into my analysis. And I think that was actually coming across more when I was anticipating a bigger move higher or that potential long-term reversal. So what I wanted to do is, because I haven't been following the markets and because I've had a lot going on as well as outside of the charts, I just wanted to do something a little bit different with this video. And what I'm going to do in this feature topic is how I would approach it just from the very beginning, as opposed to each week having a bit of a recap and already having an insight and a grip on what the market's been doing. So without further ado, what I wanted to do is, obviously, we identify where we are at the moment on the monthly dealing range, and then where that fits into the the time of year and the quarterly shifts. So from this low to this high, we are still in a premium. So we're not actually expecting the market to do anything crazy like continue from this point, although we do actually have this big PD array here. So we're going to start mapping out these PD arrays on the monthly time frame. This first PD array, this is actually a rejection block here, and we've also got this fair value gap here. So you can see the respect that we've actually got within this region. So I'm going to leave that on there as a white rectangle. And if you have a look, we've actually created a new dealing range here where we've actually got the high taken and we've got the low taken. And we've actually, at the moment, sort of, just halfway into the month, we've created this fair value gap here. So what that's telling me is we've taken this outside liquidity, we are stalling at this price, and at the moment this candle is showing some form of indecision, but this monthly candle hasn't closed yet. So we want to go down to the weekly time frame and look for some more information. And I'm using the fair value gap tool by Nephew Sam, which is what the red and green boxes are here. So what I want to draw your attention to is where we were reaching into last week, which is this here, and this is a bullish fair value gap. So where we've actually come back down last week, we've actually gone deeper into this monthly key level, which is the PD array on that macro time frame. And then what that's done is it's actually taken us all the way down to this weekly PD array, which is your fair value gap, almost to the pip. So we are trading into this fair value gap, and then below that we have the bullish order block here on the weekly time frame, which is actually the lower part of the boundary. And then we'd have the mean threshold of this weekly fair value gap, and we've got these relative equal lows. And Michael actually highlighted for us last week a few key levels. So I'll put these on the charts now so we can have a look. So 3,500, and then it was 2,900. So 3,400 and 2,900. And what that is that's that old high. It's a key round number, psychological number at 3,400. It's also taken us within this order block here. So a weekly old high, and that's significant in price since we've broken this as well. That would actually put us into a discount within this overall move on the monthly time frame. And then what he's saying is the long-term objectives, if we go down to the, or up to the monthly time frame, that 2,900 level, when you actually have a look at that in price, we've got this area of significance where we're seeing it respected here. So this would be resistance turned support in the retail world. However, you look at what he's actually identified. Now, I've had to disable all of the notifications on Twitter because I work full time. I'm a dad of 2 young children, and I also have a life, and I just can't keep up with all the constant messaging, which is a shame, because if it was purely trading things, it's only going to add value to my education. But I just made the decision lately that I need to free up a little bit of time, and I can't constantly have my Twitter pinging off. So I've disabled that. I've also deleted the app as well for the time being because I need a bit more focus. So we've actually got this volume imbalance here where this has actually created that volume gap, and that here is actually the lower boundary of that gap, that imbalance, but it's also the last candle before the up move on the monthly time frame. So this would actually be mean threshold of this bullish order block. It would also be the lower boundary of this volume imbalance, and it would also be the last candle before the up move there. And you can see that that is a huge area of significance. If we come down to there, then that would be absolutely amazing. If we do, then I will be looking at taking some large positions from a passive investment portfolio point of view, with the S&P 500, but also with some other micro, small and medium cap US companies. And that would be for a minimum of 3 to 5 years investment hold. So that would actually mitigate any further downside sort of risk that we have. And I've also decided from an investment point of view, and obviously please don't take this as investing advice because I'm not soliciting that. This is just what my plan will be. As soon as we actually reach the 3,400 mark, I'm going to be buying equal chunks in the market, which is a well-known technique for time diversification, which is actually dollar cost averaging. And if you're not aware of that, I would definitely recommend that you look that up. And what I'll be doing is I will be buying consecutive monthly investment chunks every month, the same amount, in the anticipation that we are going to continue to see some downward movement. So if I can average a sizable position between here and here, which will actually give me time diversification, which means if I was to say put £10,000 in here and we continue to move down, then I'm actually taking a percentage loss on 10,000 of 15%. So that's actually quite a large sort of drawdown, if you like, on that initial capital investment. However, if I'm actually averaging my prices, so £1,000 here, £1,000 here, and £1,000 here, etc., all the way down to say here, and then maybe that's 5,000, and then over the next 5 months, just to keep things nice and simple, another 1,000, another 1,000, another 1,000, another 1,000. When I actually get back to the original investment on option 1, investing 10,000 here, it's minus 15%, then it's back to 0. So I've actually gained and lost nothing back to this equilibrium price. However, with the dollar cost averaging, what that means is everything that I invest here there's less exposure to the market, and every single month that I'm buying into the market, I'm getting a better deal. So when I get to here, this is the cheapest investment and it moves up. All of these have now been rebalanced in price and they're back to 0 starting balance, or like no equity gain at all. So that's balanced there. However, all of these investments, I've got 5 investments at varying degrees of profit. So it gives me time and price diversification. So that's what my plan is going to be in terms of my longer term investing. So when we actually come to the monthly time frame, if the monthly candle closes anything like this, then that would show me indecision at around this level, and we would be looking to trade back up into this region, which would be like this. So that would actually put us back into a premium, come back in to fill this gap, and then trade lower into the downside objectives. However, we can't actually trade that. We can only think and anticipate it. But we can see that we've rejected this here. However, the laws, if you like, of continuation, we're taking the low, taking the low, taking the low. But what's different here is we've taken the low, we've rejected and respected this monthly key level, but we've actually traded back above the close of this price. You see that? So maybe we are anticipating a bit of a move higher. So I will be considering that looking into next week. And then when we go to the daily time frame, you can see what we've got here. So we've had that move down into that lower area, and then we've had a big push up, and that would have induced lots of buyers. So there's now lots of stops below this. And you can see that instantly this was just a trap. We've traded straight back up into this fair value gap. We've almost rebalanced that fair value gap, but what we've done is we've just come back to that old low, and then we've actually started to sell off. So if you compare the S&P 500 with the Nasdaq, we've actually had a close below this in price after rebalancing some of that fair value gap, and then this here is slightly skewed. So we do have some measurable SMT divergence. And then when I come in and I look on the monthly time frame, I've not shared this anywhere because to try and get this chart into context and explain it would be quite difficult. However, you can see this massive extended move up from 2021. If you go to the monthly time frame and you look from where the move originated, we've got this fair value gap here. So we've come back in and we're actually rebalancing price within that region. So you can see how those levels are being respected. And this dotted line is actually the mean threshold. So if this is cheap, this is expensive, but within this context, then this is actually fair value. So what they will be doing is they will be building orders in and around this area. And so providing that this level here on the dollar index is respected, because this will actually be a key area for me, then we are to anticipate higher targets. Overall, obviously, we're in a risk-off environment, so there is going to be money seeking yield, and that's going to be in the form of safe havens like the US dollar. And obviously, that's what we've been seeing here. And it's very clear that overall, we're in an absolute shit show in terms of all of the global economies, and I don't see that getting any better. However, what the Ukraine war has actually been doing in terms of the US, they've actually really heavily been funding this. And in terms of the military, private contracts military arms division in the US, that has a huge impact on political interest as well as financial gain. And if they are funding a war, then that's generating income. So I think that's actually helping the US economy as well right now, but that's my personal opinion. So we've got this area of interest, and I think that's why we are stalling on ES1. Where are you? Here. Yeah. However, it's not an opportunity to start getting excited to take any long-term buys. We just need to anticipate that we could have a short-term reversal for retracement higher into this overall leg here with the high here and down here. So if this low is respected, then this is my dealing range here. So that would actually put us back up into here, and we'll just come and take this short-term swing high, because you've got a high, lower high, and a lower high each side of that. But we need confirmation of that. So we're going to see what the lower time frames say. And what I will do is I'll delete that. We've got all the key levels on here. I will keep that here. But I'm going to show you what I do when I actually approach the market to try and get a better understanding of the moves that I missed, and also any opportunities that I could see where we are going to be moving into the coming week. So last week started on Monday the 10th, so vertical line there, 10, and then I've actually updated this tool so you can see the price action split into days. So this one here is actually going to mark the end of last week trading, which is the Sunday. So this solid line is the beginning of the week, and starting on the 1 hour time frame. And if you are up to date with my PDF that I shared in terms of the entry criteria, what we're looking for is 1 hour PD array to be traded into. And of course, the first criteria on that PDF, if you refer back to it, is going to be the bullish expansion. So whatever the bullish continuation is going to be. And because we didn't have any signs or indication that we are turning around, the bias is always going to be on the erring on the side of continuation. So that's to the downside. So the first trading opportunity was 9 a.m. on Monday, and you can see this fair value gap here. That won't actually show now because we are completely filled in over here. However, this is a fair value gap. We've traded up to that there. We've taken these short-term highs. We've actually come back into the premium of this. And obviously, guys, this is hindsight, but this is how you get an understanding of how it works, because you've got, this was already explained by ICT, which I found really interesting. If you've not watched that, definitely go back and watch his video. But this would have been your dealing range on the 1 hour time frame. We've come back up into a premium. We've come in to take the buy side liquidity here, and then we've paired that with the lows. Nice and simple. That would have been your first opportunity of the week. And then we've actually got the this would have actually been the New York high. So that one won't work, no. So can't put that on. Yeah, I know, sorry. So London and New York, so it was just at the crossover. So your next opportunity would have been from high to low there. However, we're going into the next day. So this is still the high, this is the low, but obviously as we start to print lower during Asia, all of that is considered. So we have that here. We've traded back up into this, and then we've taken the sell side liquidity. But what that's done is we've taken the sell side liquidity of anybody that was going short. Then we've come back up to take the buy side liquidity of those people that were actually on the right side of the market. And this would have actually given us the dealing range for that trade execution here. And then that's paired with it just here. But what that's done is that's actually created equal lows. So when you see that here, you know what's building underneath there. That's correct. If you got that, sell side liquidity. So your sell side liquidity is building ahead of this big red news. And if we refer back to the news on Thursday, that would have been the unemployment claims and CPI. CPI is huge for the US and anything that's related to that. And it actually shook the world in terms of the all the Forex markets, because I know TradingView were actually advertising that. But if you have a look here, what we've done is we've actually traded back up into a premium into this, which has then created relative equal highs. We've crashed down, we've swept into that level there, which was the weekly fair value gap, look, right to the pip. Then we've taken the sell side liquidity for those people looking at trading a continuation of this as a bearish move. Where are their stops? Here, 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 and then back up into this fair value gap here, which takes us to this old low here. So that's, well, to be honest, like I was dipping in and out of it, and just watching it after the fact was just really pleasant. it was emotion free. I had no anticipation. I had no vested interest in knowing what was going on in the market. And it was actually really pleasant to just sit back and let the market unfold. So that's a bit of a featured topic in terms of the dollar cost averaging. That's a recap of last week's price action. So let's have a look then at what I think could be unfolding for the coming week. And then you could hopefully use some of that insight into your own analysis. So I think the sell side liquidity resides down here, sell side. This is actually imbalanced. So I would say if we're actually going to trade up above that, the next objective is going to be these equal highs here. So those are my two areas of interest, buy side liquidity, sell side liquidity. And if we do actually take this high here, come back down and we create a higher low here, then I would be expecting further prices to the upside. So we're just going to have to wait and see really. If we go down to the 4-hour time frame, we've come back in. This actually looks like it's a higher high. However, this was consolidation. This wasn't actually confirmed swings. And this would have actually been the structure short-term high on the 4-hour time frame. And the reason being, key level, the reason being is this is the displacement leg. You see that? So this is where the displacement leg originated to take the sell side liquidity here, and this has actually created that imbalance. So when you've got that on the 4-hour time frame and you have your 15-minute shift in market structure, that's your, I'm going to label that as daily, swap that to 4-hour. So we've completely closed back in that range, and then we've come back in, and then we've come back to rebalance this price leg here. So this is actually trading within the range, which is another concept ICT teaches, and he did touch on that as well in terms of his latest video, Bridge Builders, I believe. So the market at the moment isn't very clear for me, because I like to see a nice structure on the 1-hour time frame, something like this, because that gives us an easy indication onto where the market's going. But you can see now this is it's a little bit too choppy for me. However, the overall momentum is still to the downside. We've not had any confirmation yet to say that we are reversing either short term or long term to the upside. The whole global economy at the moment is screwed, so there's nothing to indicate that we want higher prices, unless obviously they start to announce like really big indications of stabilization and positive outlooks, i.e. we start to be dovish as opposed to hawkish with the Fed and things like that. So we've got this area here, so we can expect price to come back down and to trade within this level. If I was a gambling man, I would say we're gonna trade lower, and then we're actually going to meander around here, come back up to take the buy side liquidity, and then that will be after engineering sell side liquidity. So it's the drawing tool. Don't often use this. Drawing tool, where are you? Brush. So imagine the market was to come down and it's doing this, but it doesn't really do anything until we get a news driver, which then goes, oh, there we go. Something like that, what do you reckon? So let's have a look to see what is in the economical calendar, and then we'll try and add some context around that. So red news Monday morning at 8:30, then a gap on Tuesday. So maybe this isn't possible. Maybe that red news is going to give us a purge down into this and then come back up a bit sooner. And then later on, we have this, never heard of this, but manufacturing index will be obviously industry led, and that's not until Thursday. And then we've got FOMC, somebody speaking then, never heard of them. never going to investigate them. All we need to know is it's a PM Wednesday, which could actually give us a midweek reversal. So there you go. So that would actually give us the thesis for the downside, the trade higher into a midweek reversal, and then continuation to the downside. So what I would do is I will save that chart just for a bit of fun. Hopefully you've found some value in that, and if you wanted to share the channel, please do. I want to try and get to reach as many people as possible. If you found value in it, please leave me some feedback in the comments below. If you aren't subscribed already, please hit the subscribe button. I do 1 or 2 videos a week maximum, so hit the notification icon and be the first to actually get alerted to these updates. And until I speak to you next week, thank you very much for watching, and I'll speak to you soon.